Hello friends, welcome back to my channel. I am Naveen Bhat, Senior Business Consultant. If you are new to my channel, please subscribe my YouTube channel. Like the video and press the bell icon to get notifications of next videos. You can call me on 9820245312. Today, I am going to talk about personal finance. I will discuss how to manage your wealth. If you have not started your financial planning yet, then this video will be very useful. If you have already started, then this video will be refresher course for you. So let's begin. What is wealth management all about? Wealth management is a step-by-step plan to meet one's financial goals. Also helps in managing and creating wealth. It's a long-term planning of managing your finance properly. Benefits of wealth management. Let's discuss the benefits. You can enjoy better standard of livings. You are prepared for emergencies like job loss or lockdown. Financial planning help in increasing your savings based upon your financial goals. Understand proper investment planning and choose the right financial products. You can enjoy peaceful retired life. Wealth management has 4 steps. First step, wealth protection. Protect what you have and allocate as per your financial goal. Second step, wealth creation. Accumulate. More important to manage than to earn wealth. Third step, wealth distribution. So that wealth is passed on to the next generation without any hassle. Fourth step, periodic review. Review all your goals, investment and returns on each. First step is wealth protection. You must take adequate insurance to cover risk. The key insurance are 1. Mediclaim family floater policy. Have adequate medical insurance cover. 2. Term insurance. Always take pure life insurance cover. 3. If you have any loan, then liability insurance can be taken to cover the loan amount. 4. Also take other insurance to cover critical illness, vehicle, property etc. Golden statement. Always remember that insurance is not an investment, so never mixed investment with insurance. Create emergency funds. We will always maintain emergency funds to cover unforeseen situation like job loss, lockdown. The funds should be able to cover 4 to 6 months of monthly expenses. Emergency funds can be in the form of cash, short-term deposit, saving account balance. Let's move to the second step, which is wealth creation. In this step we will understand about wealth accumulation. First, complete your risk assessment. This is mandatory to understand your risk appetite. Basis the risk profile, we will choose the financial products for our investment. There is no financial products without risk. All investment are subject to market risk. Now create financial goal. All goal has to be based on the need. For example, 1. Funds for kids higher education. 2. Funds for kids marriage. 3. Funds for retirement corpus. Once goal is identified, we need to decide the target amount. Basis the target amount, a fixed amount of monthly saving will be allocated to each goals. Before move ahead, let's also understand what is timelines and goals. Each goal will have predefined timelines. Define clear timeline for achieving your goal. Also we need to have goal which is SMART. S is for specific, M is for measurable, A is for attainable, R is for relevant, and T is for time bound. Now we will identify correct financial products as per our risk profiling. Various products are: debt funds are bonds, deposit, PPF, EPF etc. Mutual funds are different funds like balance, debt or equity funds. Equity means investment in stock markets like shares and ETF. Residential or commercial real estate can also be considered. Gold and other assets is also option. Diversification and correct asset allocation is very important in achieving your goals. Now we move to our third step, which is wealth distribution, which is succession planning. Nomination should be done on all financial products like bank accounts, investment. Will help in clear distribution of your wealth. Trust, all wealth can be transferred for efficient management to a trust. Periodic review is the last step. The review has to be done on regular basis, else you may not achieve the goal. First, we will review the goal and reset the goal basis any changes. Second, we will review the investment and reassess our risk profile. Third, we will review returns vs inflation. If it's negative returns, then we may have to change the asset class. At last, we will check the tax impact due to change in laws. Any changes in tax law may impact our maturity amount. Please like and share this video. Subscribe my channel. Don't forget to press the bell icon to get notification on my next video. Thank you very much from bottom of my heart for watching my video. Tell me what you liked about the video in the comment box.